Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are reacting as we make our way back to the new normal. And stocks have taken a breather with the Nasdaq-100 back at all-time highs and the other major averages close to going positive. Despite the recession we are already in, Phil, it's really quite remarkable the move down and up that we've seen in just under 100 days.
Yeah, I think the market's well ahead of the economy, that's for sure. So we know that we've seen some recovery in airline bookings, but still very low levels. We've seen some recovery in store openings, and we know that a lot of the states in the US have now opened much more than they were in the middle of lockdowns. But say New York, for example, is still doing curbside pickup for retail. So we're not anywhere near back to normal, and yet the stock market, as you said, is pretty much back to at least the start of the year levels, if not all-time highs, which the Nasdaq has. We've talked about why the Nasdaq has had all-time highs. It's a little bit because of the stocks that list on Nasdaq. Amazon's really well placed for online sales. Zoom, which is a member of the index, is a common thing that everybody's using these days. So there's a few reasons why the Nasdaq's going well that are coronavirus related. But in general, I think the economy is going to take longer to recover than the stock market is indicating. And there's been a couple of reports out this week that have sort of indicated we could have pretty significant recessions.
My concern is if we take a look at our first chart here, not everywhere in the United States are cases falling. Most concerning in the South, where the expectation with warmer weather, that would not have been the case. They seem to be increasing in some areas quite significantly.
Yeah, so Texas has seen more than a 50% increase in cases week on week, which is a lot of new cases. But you're right. I mean, considering that the whole point of opening up the South earlier was because it was warmer and, you know, the warm weather and all this ultraviolet light was meant to make it much harder to transmit. Those are the states that are now seeing cases uptick. So potentially they've opened too early. And we've been talking about that as well. Iran opened way too early and it saw a second wave of cases. And in a lot of cases, these states are seeing the start of the potential second wave as well. So that really does worry, I think, us in terms of longer term. If we have to shut down the economy yet again, what will happen? Because we're hoping that the recession that we're having will be short and sharp, not a double dip.
What if we take a look at our next chart here to see how does the U.S. compare to other areas of the world and their efforts to reopen and contain the virus?
Yeah, I like this chart just because it's so hard to compare all the single country totals when everybody's got different populations. So this is looking at daily cases per million residents. So it's a per head number. And you can see that Italy did have a pretty significant amount of new cases per head, similar to us, but they have managed to crush their curve. And the current rate of infection in Italy is way below the level that we're seeing in the US at the moment. And even Iran, which we just mentioned, which is having a second wave, is still only seeing half the amount of new cases per head per day as the US is. And this really highlights just how we've struggled in the US to get those new cases down. Part of the reason is the map we just looked at, where the cases have shifted from the coasts into the middle of the country, into the south, and the state by state experience has been different. But as a total, the US is seeing a lot more cases per head than pretty much any other country. And we're nowhere near South Korea on the bottom there that managed, even though it's in Asia, right next to China, to keep a cap on all the new cases that came into the country because it had pretty strict tracing and testing to isolate the new cases and get those people into quarantine.
Let's shift gears and talk about the bond market for a bit. What are you seeing with U.S. rates and how it's processing the recovery story?
Yeah, it's kind of interesting because for a long time, the equity market looked like it was running ahead of the rest of the markets, and the bond markets looked to be pretty negative on a recovery, or at least a V-shaped recovery. But what we have been seeing in the last week or so is longer term interest rates. So 3 years out has started to increase. And when you look at interest rates, they're a factor that includes what we think the Fed will do over that time frame. So obviously the Fed reduced rates in a really big hurry in March to try and get us all to get out and get spending and be able to finance our coronavirus lifestyles and our coronavirus companies creates an injection of liquidity into the system. That was why we have the jump in this chart in the middle of March, where the longer term rates stayed higher while the short term rates went down. But what happened after that was the bond market started to realize we could have low rates for a long time. Longer term rates started to come down too. That's a sort of a bearish or negative view of the economy. So the fact that that's now turned around indicates that the bond market is also feeling a little bit more positive about how quickly we'll recover and how the recovery will look. Having said that, the 10-year rate now is still below 1%. So it's not like we're expecting interest rates or the Fed to be really aggressive in a short period of time. But it seems to me to show that the bond market is a little bit more positive on the recovery too.
All right, and let's end on a positive note here, certainly for Nasdaq, but we're starting to see some pretty significant signs in the IPO market, which of course was one of the first to really go quiet when we went through the lockdown.
Yeah, it looks like we're back in the lead in terms of bringing IPOs to market. What's important though, we've done some studies on this, and when volatility and risk in the market spikes, you definitely see IPOs for a relatively short period dry up. When the market's selling off and there's not many buyers in the market, it's probably not a great time to IPO a company. But what you see is when the market stabilizes and starts to come back, the IPOs actually come back to the market pretty quickly. And we've seen a couple of IPOs during the last month or two. A lot of them are sort of well suited to coronavirus, whether they're in the medical or tech sector. But there's a good backlog of IPOs to come to market now that we're back at all-time highs. I think we should expect that the IPOs for the next quarter or so could be getting close to as strong as we saw last year.
All right, Phil. Thank you as always for joining us on Trade Talks.
You're welcome, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.